My name is Jonathan Goforth. Thanks for watching today's video. Today I'm going to talk about the housing crisis that's currently going on in the United States. If you've never watched my videos before, thanks for checking in today. You're going to want to subscribe because if you're interested in this topic, I'm going to be doing a series of videos on real estate investing. I haven't made those yet, but they're going to fit into this topic because a lot of this is going to be about rentals. That's going to fit this and the opportunity this housing crisis is giving you. And so click the word subscribe. Next to that is a bell icon. You'll want to turn that on because I don't have those videos made yet. And so you're going to want to be notified when I do those. So if you're looking at the interest of investing in real estate, either buying rentals or flipping houses, those are opposite topics, by the way. You're going to be interested in those later. I have been a realtor for 25 years, and my last 3 years, I've got to be listed in Forbes magazine as one of the top market leaders in the country. So that's a huge honor. Let's jump right into this topic. So let's talk about the housing crisis that's currently going on in this country. Are we in a housing crisis? Yes, we are. We're in a housing crisis. I'm going to show you what it is and how you can take advantage of it. You know, there's opportunities every time there's a crisis. And so there's victims of it, and then other people take opportunity of it. And so that's what we're going to talk about, and what the crisis is. I have another video that I just did on, is the housing market going to crash? That is the number one topic. This is a follow-up to that video, and so I'm going to put a link to that video at the very bottom so that you can watch that. And it talks about, is the housing market going to crash or collapse? I do not think so, and I put why in that video, but there are corrections coming. And so this on housing crisis, we're going to talk about how you can tap into some of this. To keep the real estate commissions happy, I am supposed to say I am licensed in Missouri and Kansas as a realtor, and in Missouri I have a broker's license. So I've been a full-time realtor for 25 years, a long time. I've sold hundreds and hundreds and hundreds of houses. The last 3 years, I am so honored I got to be listed in Forbes magazine as one of the top market leaders in the country. And so my first 18 years were with Reese Nichols, which is the biggest brokerage here in the Midwest, Kansas City. And I was with them for 18 years. And then after that, I transferred to Keller Williams Platinum Partners. And so that's where I'm with now. And so let's talk about the housing crisis. What is it? What's going on? Well, leading up to COVID in 2019, we were already in a seller's market. And we're going to talk about some terms to help you understand really quick what is going on. What is all this going on in housing? A seller's market. Let's put some of these up here. What is a seller's market? You hear this term a lot: buyer's market, seller's market. A seller's market is when the sellers have control. A seller is the listing. So we have listings and we have buyers. And we have this delicate balance of supply and demand. The listings is the supply. Supply versus demand. The buyers are the demand to buy all of these listings. So we have supply and we have demand. Supply and demand govern the value of every house. So how much is your house worth right now? The answer is whatever someone is willing to pay for it. And that changes throughout the year, changes throughout history. Your house probably right now is worth more than it's ever been worth before, right now. because the supply is so low. We have very low supply and we have high demand. And there's reasons why we are so out of balance. Now, experts, and experts get this stuff wrong all the time, but experts say a balance between these would be 6 months of inventory. That means for everything on the market right now, all the supply of the listings, it should take 6 months to sell all of it if nothing else got listed. And anything less than 6 months is a seller's market. The sellers have the listings. So we have sellers and buyers. If this is less than 6 months worth of inventory, we call it a seller's market. The lower and lower the supply goes, the stronger the seller's market. The sellers have more and more control. The lower the supply of that inventory. And so in 2019, leading into COVID hadn't started yet, we were already in a seller's market. Back then, we had around 3 months of inventory. I just call it 3.0 months. Oh, I hope you guys can read my handwriting. 3 months of inventory. When COVID started, our inventory shrunk. And it created a stronger seller's market because a lot of people just didn't want to move. They didn't want strangers coming in, breathing all over their house. And so our inventory shrunk. During that same time, the demand grew because the government is lowering interest rates to spur on the economy, to keep it going really strong so we wouldn't slip into a recession. Thank goodness we did not. The economy is stronger than it's probably ever been. Look at the stock market. Look at the profits of some of these companies. It's crazy what COVID has done to our economy. But our supply of listings has shrunk. And then during COVID, we shrunk down to about 2.5 months. Last summer, during 2021, we dipped to a record low of 0.7 months. Less than 1 month. 0.7 months of inventory. That set an all-time record low supply, making the seller's market stronger than ever. Now, the only people who love that are the very few sellers, the very few listings, unless they have to go buy another house. Then they have to go through the process of overpaying on the house they're going to buy next, going through multiple offers, going through this and that to get their offer to win. That's where we are. And basically, the crisis this has created is there's not enough houses to buy. And so we have all these buyers who want to buy a house and they just can't. Because us as realtors, we can't find the houses. So let's say a house comes on the market. We race over there really fast, which is exhausting for the buyer and for the agent because we've been doing this over and over and over. We race over there with 50 other buyers, 50 other agents. We all look at the same house. That listing agent gets 15 offers. The house is priced at, let's say, $300,000. Out of all the offers, that listing agent gets the lowest offer is full price. Why write a full price offer? If you know there's multiple offers, you need to make your offer win. And I've got a video. If you go through my channel, go through all my old videos. I made this one a few months ago on how to make your offer win if you're up against multiple offers. It has all the secrets of what you need to be doing. So let's say it sells for $330,000. This is called appreciation in the world of real estate. This is wonderful because everybody wants, including you want your house to be worth more money than it used to be. We love that. We love our homes to go up in value all the time. So the only thing that we want to appreciate is our home. But we don't want to use the word inflation. Because that's what we're all talking about on every other product is milk. I just got my haircut this week and they raised the price another $2. That's inflation. The cost of going to fill up your gas tank. On and on and on and on and on. Everything is going up in price. And so is your house over the past 2 years. But we're going to call that appreciation. Now, the housing crisis for buying a house is there's not enough houses to buy. And that has caused a nightmare. With this of 0.7 months, now we're not still at that. We've come off that a little bit. The market's correcting a little bit. We're not seeing the crazy appreciation we saw last year. Things will still appreciate this year. We're going to have a really good year on the inflation of the value of your house, but not as crazy as 2021 because we should be coming off this more. Right now, I think we're about a 0.9. Maybe we've come up to an even 1 or 1.1, but this should come up a little more. Interest rates are also climbing. That's going to help slow things down so we don't see the crazy, out of control appreciation on values, because that's a bit much. 2 years in a row of rapid appreciation. That gets a little dangerous on the correction. Now, the market's not going to crash, so don't worry, it's not going to crash. There's no indicators it's going to crash. But if we would get a ton of listings, possibly through some foreclosures, it can maybe get this up to 1.5 months. We really need to get this back up into a normal seller's market, around 2 to 3 months of inventory. Because when we have record low inventory or close to it, that also means record low transactions. And that makes it hard on everybody. Realtors, there's not enough houses to go around. It makes it miserable on the buyer, it makes it miserable on the sellers too, because they, even though they're getting more money for their homes, they're going to take that and just have to go spend it on the next house. Some of this is also being fueled by the inflation of lumber. A year ago, in spring of 2021, lumber soared out of control to an all-time record high. If you want to go buy a 2x4 or a sheet of plywood, try adding that times thousands of pieces of lumber for a house. The cost of lumber has backed off of that some, but rumor is it's about to spike again in a few months. So that will play into going forward with the cost of new construction. That has also elevated the prices of the resale market, which has been really good for appreciation. The other side of this crisis, and the crisis is there's not enough houses to buy. It's not a healthy market. Just so you know, this is horrible for all parties involved when we have that much of a low amount of properties to buy. The flip side of that is the rental market. Let's talk about the rental market, because in my opinion, that is where a lot of the crisis is really occurring. So let's talk about that. The rental market, you know, it's interesting. I'll tell you, if you're interested in that, the rental market fits with the housing crisis right now, because this is going to be a lot of our topic. If you're interested in investing in real estate, you do need to subscribe to my channels. Just click the word subscribe. It's right there and there below. You do need to turn on your notifications bell, because I am going to be making some more videos on a series of videos on real estate investing, rentals, and flipping houses. I haven't even made those videos yet. Getting ready to start working on those. And so you're not going to know when those videos come out unless you're subscribed and have the bell turn on. Then you get a email or a text. Hey, Jonathan Goforth made a video finally about how to buy rentals. The rental market is what's in crisis. Here's what's interesting. Driving around your city, have you noticed there's a lot of apartments being built? Just drive around the outskirts where all the vacant land is. Even inner city, you're going to see a lot of reconstruction, knocking down of buildings, and new apartments being built. The reason why is we're in a housing crisis. We have a shortage of rentals. And I will tell you, let's say all you own is your primary residence, and you're driving around, you're thinking, gosh, I wish they would stop building so many apartments. There's apartments going up everywhere. And they're big. These are big complexes. These are multi-million dollar developments. They're out-of-state investors. They are pouring money in all around the country because they know our nation is in a crisis to find good, affordable housing. And as the values of homes keep increasing rapidly, the lower priced entry level point to buy a first time buyer home, as those continue to climb in value, it's harder and harder for first time buyers to afford those affordable housing neighborhoods. And that also puts that in crisis. You know what's interesting? I'm going to share with you in just a second. But let's talk about rentals. I will tell you this. Every time you see massive apartment buildings go up, I promise you this. They have put a lot of research into that before they will invest millions of dollars into that apartment structure of many complexes and the pool and a clubhouse and a workout room, all of that. They know what they're doing. They would not build it if they didn't know the demand wasn't so strong. And what happens? They build those apartments and you drive by 6 months later and it's surrounded by cars, renters. They've rented out all the units instantly because the demand is so high due to this housing crisis. Now, you need to get in on this. I tell you, you need to have rental property. I bought another duplex. I bought a duplex this past summer. This is going to be what's coming up in future videos. I give those to a management company. I am not going to mess with the anxiety and the stress of doing it. I pay the fee. As long as you cash flow, it doesn't matter, and that's for a whole future topic. Here's something that's interesting to show you how extreme this crisis is for housing. Fannie Mae and Freddie Mac, I love to educate, so you're going to get a little bit of an education here. Fannie Mae and Freddie Mac govern the mortgage lenders as to the percentage of how many of the loans a mortgage lender can issue that are owner-occupied loans compared to how many are investment loans. Fannie Mae and Freddie Mac, their purpose is to encourage home ownership. They don't want to encourage investment properties. That's not what they're there for. They are there to encourage first-time home buyers. They want to get people out of rentals, get them to buy a home, whether it's a seller's market or a buyer's market. They want home ownership. And so they govern the percentage that a lender can issue. So all along, Fannie Mae and Freddie Mac have said a lender can only issue 15% of their total book of business that they are offering at that time as investment loans. Rental houses, apartments, whatever, duplexes, whatever they're going to be issuing, a lender can issue no more than 15% of their total loans as investment loans. But because it's a seller's market with record low inventory, the supply of listings is so low, especially in the most affordable price range where they're selling at lightning speed. The government has stepped in last summer and said, this is crazy, it's out of control. The investors are taking them all. The investors are paying cash, or they're putting 50% down, and what seller wouldn't just sell it to the investor? Investors are overpaying to get these rental properties. They don't need, and you don't need, a steal on whatever you're going to buy. You just need the cash flow. So if you're out there just waiting for a steal, you're not going to get it in this market unless your timing is so perfect you just happen to know the right person. There are deals out there. There are some amazing deals, but you're going to have to find those. But they are out there. If you're going to flip, you do need a good enough deal that you can fix it up, flip it, make money on it. Yes, even in this market, those deals are out there, but you got to be able to find those. That's for future videos. Fannie Mae and Freddie Mac, they stepped in and said 15% is too much. we're going to limit this down to 7%. Mortgage lenders can now issue no more than 7% of their total book of business offerings to investment loans, which Fannie Mae and Freddie Mac thought that would eliminate half the investors and it would fix the problem. And of course, it had no impact at all. If the government would just stay out of this, it would make it go so much smoother instead of when they tamper with free enterprise and free trade. But I don't know why. You can put comments below why you think this reverted back, but it did. It took a few months of the lenders being forced to operate with this ridiculous rule. All it did was make investors find other ways of buying them. They went with private lending, or they found cash from other sources. So Fannie Mae and Freddie Mac, for whatever reason, reverted back to 15%. So we're back to this. But this shows you, in the last year, the kind of crisis even the government has recognized we are in with housing. It's a shortage of rentals to get and a shortage of homes to buy. It'll correct itself. It'll take time. It's not going to correct itself this year because here we are in middle of February already. March and April and May and June are coming. That's our 4 biggest months of the year. For housing, we're going to enter into our spring market with very, very low inventory. It's going to be a wild, crazy ride again of multiple offers, rapid appreciation, not as crazy as last year, but it's still going to be that same kind of market. That's where we are. Check out the video below on is the housing market going to crash? Because it's just interesting. And please subscribe. I'm going to start working on other videos. Thanks for watching. I hope you enjoyed this.